Hope you're doing well everyone. Welcome back to AZ Trading. In this video I'll be going through how I do a top-down analysis, why it's important, but also when it's not necessary and can actually be a bad thing for your trading if it's not used correctly. Just for context, we're on the Nasdaq 100. So when it comes to top-down analysis, most people online will teach you the same things. They'll start you at the monthly and mark out all the key areas, then go to the weekly, go to the daily, and then all the way down to the 1 minute. So first, you need to know exactly what type of trader you are, which means the duration of your trades. So are you a scalper, so you hold for minutes to an hour? Are you a short-term trader, so around an hour? Are you a day trader, so a few hours? A swing trader, so a few days to a few weeks even? A position trader, so potentially years? Or are you an investor, so long-term? The reason why you need to know this and have a good idea on which type of trader you are, let's just say you're a scalper, so you're on the very low time frame charts like the 1 minute or the 3 minute. For example, let's say we see a bearish move and we have a bearish setup. There's no setup here, but let's just say this is your bearish setup. Just think about this for a second. Why in the world would I want to know what the monthly chart is doing, what the weekly chart is doing, or even what the daily chart is doing? So for example, on this daily chart, zoomed in, it's bullish. On the weekly chart, it's bearish. On the monthly chart, it's bullish. But if I'm a scalper on a 1 minute chart, why would I want to know that? It just swaps back and forth and it doesn't mean anything to me. Okay, that's one of the main points that I have, so I hope that made sense. It's just about finding what's relevant. So instead of thinking about doing a top-down analysis, the more relevant way to think about it is like doing a nearby analysis. So instead of finding all the key areas, starting from the monthly to weekly to daily, what you should be focused on instead is a nearby analysis. So finding key areas that are nearby price at the moment. Just as a quick example, I've zoomed out on the daily chart, and yes, it would be a great idea to mark out this all-time high. However, do you see how it's not relevant to price at the moment? If I'm a short-term trader, knowing this all-time high when we're so far away is not going to help me. Instead, we zoom in, we look at where price is right now, and we look for nearby key areas. So for instance, we have these clean relative equal highs over here. If we extend that out, I would say that this key area is much more relevant than the one above. Would you agree? Okay, so long story short, when it comes to technical top-down analysis, this is how I mark out my chart. The only things I mark out are areas with liquidity and gaps. That's it. It shouldn't be complicated. It's all about finding the relevant liquidity and the relevant gaps to your trade. Of course, you can mark out some key areas such as this equal high over here. It's definitely nice to know, but it won't be influencing my trade down here, since I'm a short-term trader. If you're a long-term trader, yes, this would be relevant. But chances are, if price reaches an area around here, then I'll be looking at these equal highs, because it'll be relevant. So as you can see, it's very easy to label liquidity, just above and below equal highs, and above and below different swings. So if we look at where price is right now, the most relevant liquidity and gaps above price would be this equal high over here, and this daily gap over here. And if we look for nearby liquidity and gaps below, then you can see a swing low over here, as well as a gap down here. But once again, this one is already a bit further away from relevancy. So now would be the time to go down different time frames and find closer key areas. So we'll drop down into a 4 hour. Here are those daily levels that we marked out. Now we do the same thing. So nearby liquidity above this swing and below this daily swing that we've already marked out. And if you zoom in a bit, you can see a gap that's been printed right here. If we extend that out, that would also be a relevant area. Now on the 30 minute, so there's that 4 hour gap and that 4 hour swing high. We can refine as we go, meaning this gap is no longer a gap in this 30-minute time frame. It would be from the bottom of this candle to the top of that one. We can zoom down even further, so now on a 5-minute chart, we can label this swing high and this swing low, which brings me on to the next topic, which is the importance. This just means that higher time frame areas take priority. So although we have a 5-minute swing high up here and a 5-minute swing low down there, we have these higher time frame swing highs above. As a short-term trader and a day trader, meaning I'm in and out within the day, the relevant areas of liquidity that I always mark out on my chart are the previous day highs, which is this one, and the previous day's low, which is over here. So once Wednesday finishes over here, I'll be moving this previous day high to the high and moving this low to the low. So on Thursday, those will be kept in mind. Today it was very news heavy at 8:30. But I'm just going to go down into the 1 minute chart at the start of the day, and I'll just mark out what I'd see liquidity wise and gap wise as the day progressed. So the day starts right there. I'm just going to scroll over like this so we can simulate what gaps and areas of liquidity we would see. So this one's quite obvious. We have these relative equal highs here. Those are the equal highs just there on a 1 minute chart. Now we have some gaps that have been printed. So this one here, this one down there. So these would all be potential objectives for price to reach later in the day. So as we scroll through a bit, we can see this lower gap be filled. We see another 1 minute gap that was printed down here, as well as equal lows down here. So these are some more short-term objectives. For some of you, you might even have a long setup just down here, and you might take your partials at this gap over here. So let's scroll through, and we see this gap was filled and also left some relative equal highs over here. We scroll through a bit more and those equal lows were taken. So if you had a short setup over here, you could look for objectives such as this gap and these equal lows. This is going to take forever, so I'm just going to go a bit quicker. So the new day starts and we zoom through, and as we can see over here, we've got some relative equal lows as well as some gaps above. So I've just marked them out as potential objectives, and if we zoom through, we see this gap be filled. However, these equal lows have not been touched. So at this point, you should be thinking to yourself, price is being a little sus. Why are they not taking the liquidity? Are they just running? Chances are, if you see the liquidity there, price will see the liquidity there. So we scroll through just a bit more, and you can see that this little wick here was completely manipulated. There's just too much logic behind why it went where it went, because there's just liquidity resting there. And once it took those lows, we can call that a raid. If we're looking for an RMR setup, the next thing we'd look for is a market structure shift. So above these highs, we call that the shift. Next thing we look for is a return. So we have a gap that it could return to. If we extend that out, this candle retraced into that gap. That's our return. We can place a long, have our stop, bottom of the raid, objectives above. And what objectives, you may be asking? We still have those objectives we haven't reached. So those equal highs up there and this gap, as well as these equal highs from yesterday. And as we scroll through, those were taken very swiftly, so this in itself could be a very clean RMR trade. Now we continue to go through. Do we see more liquidity and more gaps? Yes, we see this swing high over here, and we see a gap down here, and you can see that this gap was later on filled. But what about this swing high over here? If we zoom through a bit, we have a swing high formed over here. Did it take out this liquidity? We extend it through, and it seems this swing high did not break through that one. In fact, it actually formed an equal or relative equal high, so above is even more liquidity, so an even more likely objective. And we do have a gap down here, and we know that news is just about to tick at 8:30, so a potential setup when news ticks that you could be looking for is to fill the gap down here, create a shift, start a return, and hold for an objective above, which are the higher time frame areas that we looked at before. So let's see what news does. As you can see, what we looked for was a fill, a shift, and a return. However, as soon as news ticked, we had this strong bullish movement which formed a gap right there. We extend that, we have a retracement into there, which could potentially be your long entry, which would be an amazing entry. High risk since it's a high impact news event. Not the setup I was looking for, since I was looking for a raid perhaps into this gap, then a shift. And as price pumps, where does it reach to? We have this previous day high that we always label, which is a key area of liquidity. So it reaches that area, and this is where we are right now. Sorry guys, I think I went off on a tangent there. But the main message about top-down analysis is, instead of thinking about it as a top-down from monthly all the way down, think of it more as like a nearby analysis. So finding the most relevant area of liquidity and most relevant gaps in relation to where price is right now. There's just so many things to talk about when it comes to top-down analysis. I didn't go very in-depth at all this video, and I have so many more things to say, but I don't want this video to be so long, so I think that'll be it for me. If you enjoyed this video, please give it a thumbs up. If we hit, let's say, 10 likes, I'll make a video covering some other important factors. For example, if you found a bullish trade in a short time frame, but at the same time there was a bearish trade in a higher time frame, which one would you follow? But as always, thank you guys so much for watching. Please subscribe if you enjoy my content, and as always, take care. Peace.